The owner of Ray's Radios, a small trading business, has provided a list of info at the end of September. We've been given a whole bunch of items there. We're told the business applies the conservatism principle, and we've also been given 3 bits of additional info. One about the loan, one about the phone bill owing, and one about the firm's stock. The question we've been asked for B is, with reference to a qualitative characteristic of accounting, explain why items are classified in the balance sheet. So we've got all the items from this business listed there. What we don't know is which liabilities are going to be repaid first, which assets will become cash soon. That's the point of running a business, to get cash. Which assets will be owned for many years, e.g. a property. And do we actually have enough money to pay liabilities this month, this year, 10 years and so on? We can't get any of that info just from that list of items. So that balance sheet wouldn't tell us any of this information. So what we're going to do is look at an example and say, which business would you rather be, business A or business B? Both have total assets of $100,000. So at this point, you'd say, I can't choose between the two. They're both as good as each other. Total liabilities are also $70,000. Now, if that was all we looked at, the total of assets and the total liabilities, you couldn't split these two businesses. So what we do is we classify the balance sheet and we split assets and liabilities into current and non-current. So let's say we had that info and we said the current assets for business A were 50 versus the current assets for business B were 20. Well, I'd probably prefer to be business A because it looks like it's going to have more money that's going to become or get converted to cash within the next 12 months. That's what current means. And it's only got 20 versus $50,000 of non-current assets, which will last longer than 12 months. Business B only has $20,000 of current assets to pay all its bills in the next 12 months, so I'd much rather be business A. However, what we also do is we classify liabilities. We split them into current and non-current. So what if we found out that business A had current liabilities of $60,000, but so 50,000 current assets versus 60,000 current liabilities, but business B only had $10,000 in liabilities? Well, that actually changes everything. Two businesses who are identical in terms of the same total assets and the same total liabilities are actually very different. And we can see that when we look at compare the current assets and liabilities for each. I'd actually much rather be business B. It doesn't have as many current assets as A, but it's actually got double the amount of current assets to its current liabilities. It shouldn't have any trouble paying back these debts. Business A, on the other hand, well, it does have more current assets. It's got more current liabilities than assets. So there's going to be an issue at some point. How are all these going to get paid if we don't have enough current assets? So what we do is we classify balance sheets so we can figure out that in this case, we'd much rather be business B. And the reason is we can answer all those questions we posed before. And that's why we classify items in the balance sheet. Let's go and relate that to a qualitative characteristic of accounting. So let's identify a qualitative characteristic, define it, and relate it. So we're going to use relevance. Relevance says information which influences decision making should be included in the firm's financial reports. So we've identified and defined at the same time there. Let's go and relate that to this question though. What has that got to do with the classified balance sheet? Well, the classified information, current and non-current, is very useful for decision making. You can see what's due and when, have we got enough to cover it, and so on. For example, the firm can see which liabilities are due for payment within the next 12 months and those beyond 12 months, enabling it to prioritize payments. So there's many sort of good examples or things we could talk about for the relate part, which a classified balance sheet would help us make decisions. Looking at the marks of this question, we'd have 1 mark for identifying and defining the qualitative characteristic of relevance, and 2 marks for sort of relating it to this particular case study and giving a really good example of how a classified balance sheet would assist a business in making decisions.